Hello, everybody, and welcome to another meeting under the titles Xprimm Time for Business. We are talking for the second time about how the reinsurance markets in the sea area are facing the COVID crisis. And today we will focus on the Croatian and the Slovenian markets. We have live together with us guests from both countries. Mr. Hrvoje PAUKOVIC, he is the director of the Croatian Insurance Bureau. Welcome, Hrvoje. And Mr. Davor, member of the management board at ALLIANZ Invest, also member of CFA Society. And we will also have some video recordings with interventions from Mr. Gorazd, CIBEJ, Managing Director of the Slovenian Insurance Supervision Agency, and Mr. Blaz, Executive Director of Finance at Triglav, and also representing CFA Society. So, for esteemed guests that will help us to get a glimpse on the way that these markets have ended the first half of the year, how they have faced the crisis, and what expectation they have from the future. But just to start, and to set the scene a little bit, I will ask my colleagues to show us a graph that we have prepared. We have looked to the dynamics of the insurance markets in the Adriatic area, and as you can see all, the results are very different, speaking in growth rates, but on the other hand, I think that it's worth mentioning is that I think that the results are better than the initial expectations. We were expecting, when the crisis and the lockdown started, to see by the middle of the year very, very big decreases in the insurance business, which in fact didn't happen on average, at least. Thank you. I would start with you, Hrvoje, and please give us some general considerations on the evolution of the Croatian market in the first half of the year. How strong you have felt the impact of the COVID crisis? How did insurance fared during this period?
Well, thank you once again for inviting us to this esteemed panel. Yes, for Croatian market, we could say, yes, it was a somewhat of a surprise, but I think we generally handle it extremely well. I think our Croatian insurance industry is strong, very resilient, working within the robust Solvency II framework. And I think we have managed to exceed even expectations of our customers. We have, in very difficult circumstances, we have managed to pay out all the claims. We have managed to, through business continuity, to handle all the contracts that were in place. We were able to conclude numerous new contracts. So I could say, looking at the first half of the year, or even first 8 months, we have now that even the data for the first 8 months, I think it's more than stable. I think on the non-life side, we have been extremely good. And we see a slight increase. It is also due to the Croatian insurance players stepping out of Croatia and working in Austria, Slovenia, and Italy as well. But I think we have really managed, and I think our customers are really satisfied. We have had no disruptions. Everything was done remotely, strongly pushing new technologies. I think we advanced towards the customers in terms of sending them various contacts through the digital format or digital channel. And I think the market actually responded quite well. Of course, it's a different market for every company, but I think the duty to serve the customers was really handled very well. Prudent management of capital is also very important during the economic turbulence, and I think we did it also well. We have no issue whatsoever in this regard, and we are, I think, have ensured the public and the customers that we can meet all the contractual promises to our customers. Of course, some of the lines were hit more than others, but I think it's nothing specific in terms of Croatia in comparison to EU market. However, we have to stress that we have had unexpected also event, and this is the earthquake in Zagreb, in which we really had really severe difficulties due to this earthquake. However, also the industry managed to do quite well. I think by today we have paid more than 30 million euros in claims, handled more than 6,500 of claims, and we are still having significant reserves, and we are expected to pay even more. Of course, we are saddened by the fact that there are no, I would say, penetration, property insurance penetration was not higher. Otherwise, we would be able to cover even more damages, which was, of course, registered here in Zagreb. But in general, I think we are, as a Croatian insurance industry, we have joined the European efforts that we are fully committed to playing our part in all the challenges Europe is facing. We are maintaining our business continuity, serving our customers to the best of our ability. Responding very fairly and responsibly to them. I think we have offered significant flexibility. We have deferred payments. We have delayed enforcement notices regarding payment. We have stepped out of our, I would say, terms and conditions and really offered a lot. I think the customers of Croatia will value this in the future. And I think we have now ready to join all the European insurance industry efforts in order to help us overcome this difficult period, and maybe in the future create some new insurance-based solutions for the unprecedented uncertainty that we face.
Oh, this is good. I would like to ask you one more question. Both in Croatia and of course also in Slovenia, there are big market players that are in fact active in all the Adriatic area. They have subsidiaries both in Montenegro, in Macedonia, etc., etc. Do you think they have experienced a different environment in these markets, especially that they're smaller markets, maybe with a lower level of liberty of movement, let's say?
To be exact, I cannot really say for certain, but we have collaborated with our colleagues within this region, Adriatic region. Yes, they maybe had some severe, maybe lockdown measures. However, it didn't disrupt them, and all the branches of Croatian companies were doing well and succeeding also admirably in these sectors. I think we have never stopped. The business continuity was great. But what we see on the Croatian insurance market, that we are slowly shifting towards West. So as I said, Austria, Slovenia, and Italy are the new frontiers. And I think Croatian industry is more facing towards West. And they're trying to, of course, gather more premiums on much more developed markets. Not saying that we will, of course, lose sight of the markets going east. However, I think the primarily focus is now in the past 2 years has been those 3 countries, and we are thinking that considering that in the future they will invest even more in order to, of course, draw as much premium as possible towards their balance sheets.
Thank you, Hrvoje. We will play in a couple of seconds a short registration with Gorazd, because we have asked him also to tell us how the Slovenian market went during the first part of the year, and also in his capacity as a market regulator, how can the market authority help and support the players so that they can maintain their solvency, their stability of operations, and also maintain the quality of services.
Yes, thank you very much for inviting me again to Xprimm. I'm always happy to talk at your events. And especially now, I'm very happy to comment also the results of the second quarter in Slovenian market. The total net profit of Slovenian insurance undertakings in first quarter 2020 compared to the same period in the 19 strongly decreased, what was no surprise. And of course, the main drivers of the Slovenian insurance companies' profitability are net investment incomes, especially net investment incomes of life insurance portfolios. And then in the second quarter of 2020, the total net profit of Slovenian insurance undertakings improved substantially and very much increased compared to the same period in the year 2019. And increase was really substantial, a little bit more than 50%. On the individual basis, 9 out of 13 Slovenian insurance undertakings reported operating profit in the second quarter of 2020. Regarding the impact of the COVID crisis on the operation of Slovenian insurance market, we can say that the written premium, especially the non-life insurance premium in the first half of the year, was 5% higher than in the same period last year. One of the reasons for this was also the earthquake in our neighboring country, in Zagreb, which somehow encouraged people to think about their insurance coverage. So this was also, according to our analysis, the reason for the rise in profit. And on the other hand, the same applies also for life insurance premium, which was higher by 3% than in the same period last year. We can say that regarding the solvency position of insurance companies, especially in March, when there was a significant decline in the stock markets, we noticed that there was a substantial drop in solvency capital ratio. And of course, this was closely monitored, and then later on, the insurers experienced an increase also in technical provisions, because also due to extremely low risk-free interest rate, which was also reflected in then the lower solvency capital ratio. But I'm very happy to say that right now, all our insurance companies are well capitalized, but still some of them need to be closely monitored, especially those with a large share of traditional life insurance products and those with a lower SCR ratio. This is lower than 150%. This would be, in brief, the situation in our market, which is quite encouraging. But we know insurance can see the results later on. So what is to come is still to be closely monitored in the forthcoming future. I guess it is important very much for the regulator to monitor and preserve the profitability and solvency of the insurance companies, as well at the very same time we need to control the consumer protection and to prevent unfair trade practices. In difficult market conditions, such as now with the COVID-19 outbreak, the insurance market regulators need to strengthen their activities in order to be able to also to react in a timely manner to the new challenges, and of course to safeguard the market solvency position and to protect the policy holders. The supervisors, we need to take care of the market in all situations, especially in emergencies. The supervisor must pay special attention to consumer protections, and we should always be seen as part of the solution and not part of the problem. Let me give some very concrete examples from our authority. For example, in the springtime, access to insurance companies was very limited to electronic channels, which is, despite all the positive effects in terms of efficiency, still it can be a major obstacle and challenge for many policy holders, especially for the elderly people. So all the Slovenian insurance companies, they adjusted their operations to the restrictions adopted by the government due to the lockdown. So insurance companies maintain a high level of accessibility for all these electronic channels and very quickly adjusted operationally. So they are already now very much ready for the second wave. Hopefully it will not come, but if and when, if the lockdown happens again, insurance companies are well prepared. So this is also thanks to all the improvements in digitalization they did in the past, and they were actually able to react to the new reality overnight. Slovenian insurance agency, we also prescribe to all Slovenian insurance companies the irregular weekly reportings, and then further they were followed by monthly reported, weekly reports were scrutinized, and we came to the conclusion that we had a very good cooperation with insurance companies. As a matter of precaution, we did introduce pretty much the same measures as did the other supervisors. That means that we proposed all insurance companies not to pay any dividends from their profits until October 2020, as well not to make any irrevocable commitments concerning the dividends. So this was done on the prudential side. Of course, I think it is very important that ISA, Insurance Supervision Agency, we did not receive any major complaints from policyholders. Also that insurance companies would not be adapting to the new situation, and also all the claims were duly paid. So we were very satisfied with the situation on the insurance market.
Coming back to our guests live, I will ask you just shortly, Hrvoje, to comment a little bit on the topic of the support received from the supervisory authority. Would you say that in Croatia you have seen similar measures as those mentioned by Gorazd previously?
Yes, I think that our also supervisory authority reacted very well. We have cooperated with them very closely. Of course, the supervisor needs to enhance all the supervision during those difficult times. However, we have seen some requests which maybe burdened our administration capacities. However, I think it was all done in good faith. We have also received a ban on dividend payments, which lasts till next spring. It was not, of course, applauded by the sector, but it was neither disputed by us. So we have accepted this measure, and we have received certain recommendations from the supervisory authority, which we strongly implement, and some of them were also done by after our initiatives as well. So I think, generally speaking, it's a task of supervisory authority and insurance industry to jointly, respond to those challenges that we really face. I think they have been immense, and I think the answer from the supervisory authority and the handling has been quite well. And I think, as Gorazd has said, we also did not create any issues whatsoever to our supervisory authority in order for them to be react in a certain way. I think all the recommendations we have received, all the statements publicly done by our supervisory authority have been in accordance or aligned with our reactions or our actions. So I think no issues whatsoever. But pretty much the same thing happened in Croatia as well as in Slovenia.
Gorazd was speaking in his interventions about preserving the market financial stability, the solvency, the capital capacity of the insurers, and all of these are strongly related, in my opinion, with the way the general economic environment it's evolving, and the opportunities and limitations it offers for the insurance for investment portfolios, because in the end investing assets in a profitable manner is one of the vital elements in insurance activity. And we will talk for a while about this topic of the asset management aspects of the insurance activity with our two guests representing the CFA Society. I will start with Mr. Blaz with the recording. There is a 3-minute intervention, and then I will ask Davor to continue and comment and develop the same topic.
Yeah, so first we had quite strong impacts on the markets from the pandemic in March. There was a lot of uncertainty about the future events, so the markets reacted very strongly. We've seen strong decreases in share prices and the widening of spreads, reduced liquidity. So this was all very, I'd say, concerning factor until, let's say, the regulators and central banks stepped in, provided some comforts to the markets. So more or less, we have seen a lot of markets normalize from the March. Still, some spreads continue to be wider than they were prior to the crisis. I would say that most of the insurers had quite robust portfolios prior to the pandemic, so quite conservative portfolios, and maybe the effects on the portfolios of, let's say, an average insurer or most common, let's say, most of the insurers were somewhat limited. Still, they were quite considerable. But I would say that now, a few months later, we basically see the major trends to remain unchanged from before. We are observing low interest rate environment, and the majority believes that this environment will continue for the foreseeable future. So this is challenging to financial industry, to insurers, and also to the banks. So I would say that most insurance companies are looking to get some illiquidity premium and diversification of asset classes, and are gradually increasing exposure to alternative asset classes such as private equity, private debt, some infrastructure projects, also real estate. There are more and more products like this becoming available also in the region, in the Adria region, locally. However, I believe that most of the insurers are keeping their exposure to such assets still limited, and they want to feel comfortable with their overall liquidity position, because of course those assets are less liquid. They do bring high returns, but most insurers don't feel comfortable into getting into these assets with a larger proportion of their portfolios. So I would say that mostly the insurers are keeping their portfolios conservative and keeping, let's say, the strategic asset allocation more or less unchanged compared to what it was prior to the pandemic. That's basically how I see the strategic allocation and expectations.
Davor, how do you comment? Do you agree with what Blaz was saying just now, or do you have another view or something to add, to explain?
Hi, Daniela. First, I would like to thank you for your invitation for this event. So in regard to what happened in the last few months on the market, especially insurance companies, I would maybe like a short introduction in where were we before the corona. So so I would say that insurance asset management was one of the toughest part of the financial asset management, because from one side we have guarantee rates that are falling slowly and the market rates that are falling sharply, and this all-time low discount rates have put a pressure on us to increase duration to probably the highest levels ever, just to reach the ILM, asset liability management, and to reach some targeted guarantee rates. In all that time, the pressure was to invest and to have the lowest levels of cash, so we could invest more. Of course, there are some other solutions. Basically, insurers have between 80 and 85% in fixed income, but in the last few years, alternative assets started to increase in portfolios. And once the corona strike and the market effects stepped in, like a decrease of prices of bonds, a decrease in prices of equity, the liquidity vanished, and suddenly we were in a case where we needed to have the lowest cash possible, and then suddenly we needed to have the highest possible position in cash at the moment where liquidity vanished. So during the corona, there were a few effects of impacts on solvency ratio, on cash and liquidity. Of course, the premiums stopped coming into the portfolio. The claims, especially in Croatia, because of the earthquake, also the claims came. So it was really, really hard few months for the insurance, and everybody who wasn't prepared or who didn't have enough liquid asset was in a bad situation. Luckily, as colleagues mentioned before, I would say that the regional insurers are very conservatively invested and had good levels of liquidity. So, from my knowledge, everything went pretty well here in Croatia and I think in Slovenia. In regard to the SAA, and I agree with colleague Blaz that few months after the corona, the market is where it was before. So the yields are low, equity increased, and what to be expected in the future is the same as was before. So we need to find some alternative assets to increase the overall yield of portfolios. But this time, I would say with a little more, with even harder job, because now the solvency ratios are more, I would say that our owners, because of the dividend payment and everything, probably wants us to use less capital, to give higher OP, and to have more cash because of this payment. And this is those are few tasks that we need to do it at once. So I would say that it's now even complicated than before, and with the rates lower for longer, which is also my view, I think that the SAs would change to alternatives. One of the examples maybe is ALLIANZ 11, one of the biggest entities in ALLIANZ, which is already about 25% invested in alternatives. And their goal is to reach 33%, one third of their assets invested in alternative assets. So I think that we all will have to find new investments and switch a part of our fixed income funds to alternative assets in the future.
So there will be significant changes, but we will talk about the future and your expectations about the future a little bit later. I would like to go back to Hrvoje now and start talking about the customers, because ultimately customers are in the center of the insurer's activity. On them depends in a very strong way the success. And lately we have seen that their expectations, their demands, what their behavior when buying insurance is changing. What do you think about that, Hrvoje? Have you seen some changed behavior?
Well, maybe we have seen the change behavior of the insurance as first. First of all, we have seen a significantly increased communication with the customers. We have really, as an insurance, shown a commendable degree of proactive customer-driven support. And I think the customers are responding. Of course, they have also increased their communication towards their insurer because they really do feel threatened. I think there is also one term that is has appeared, and this is financial anxiety. Of course, people are afraid of this unprecedented uncertainty. They are afraid of the future, and they are looking for some solutions, insurance that they might have it already in place, or they need to, of course, have in the future. But I think this is also a wake-up call for all of us. We are living in a different world, and we are rapidly adapting to it. I think also this crisis is usually it could be a good breeding ground for innovation, and I think this insurance industry is embracing that. Maybe we have been a little traditional before, but now I think we are embracing this trends immensely. I think it's going in the right direction. So I think there will be, we are recognizing the need to bring more value, more personalized offerings and products and communication on a more segmented basis. And we have increased to also communicate with them through video. For example, in Croatia, we have a slight project on the industry level in order how to overcome some of the obstacles in order to sell life insurance online by video, because we have rather rigid contract of insurance legislation. So we need to find a way to overcome it, and we have strong support from our regulator in this regard. On the other hand, we need to, of course, digitize quickly, to use data much better. The distribution channels will also change. I think there will be significant one. For example, we have a example in Croatia that we had an earthquake, so some of the banks have closed their premises in certain areas, and this is also affecting the distribution as well. But in general, I think how we interact with the customers, how the broker networks will integrate, it will also change soon. It may be still too early to say, but I think we are on a fast track to adopting new technologies, and I think the customers and the consumers will benefit from that. Of course, emphasizing the value of insurance, what it brings to everyday life, is a task of everyone, I would say, in Central Eastern Europe, Southeastern Europe, because of the low density and low penetration of insurance in the economies. And I think, unfortunately, such an event could perhaps trigger a boost in insurance sales. However, it is being counteracted by the economical slowdown and ever-present fear of people, how the economy will respond, will they preserve the jobs? But I think after we wake up and overcome the economic crisis, I think the insurance will be on the better level. I think we will not have to emphasize the value of insurance as much as we had before.
Well, this is quite optimistic, I would say. And I wish you from all my heart that it becomes reality. On the other hand, insurance, for instance, in other countries have told me that people seem to be more attentive to what they are buying, to the coverage in the policies, the terms of conditions, things that previously they didn't do very much. Now they are more attentive and they are already also asking for better services, after sales services, and not to speak about the quality of services when they have a claim. So at least the new generations of customers have higher expectations from their insurers than the previous one. I have also asked Gorazd the same thing, and he emphasized an aspect that I think it's worth watching what he said.
What concerns the questions if consumers are changing their expectations toward insurance providers, I would say at this point that literate consumers are expecting foremost insurance products and services to be available online. And they very much expect fast response from the insurance companies. And they search for products by themselves. So they expect digital sales channels to work properly and fast, so that they can arrange their insurance actually from the even they would like to get advice when they need it. While on the other hand, when we have the less literate consumers, they are not really visibly changing their expectation towards the insurance providers and the products, and they still pretty much depend on personal contact with the insurance provider and their fair advice. So their expectation is basically to trust the insurance distributor. And all consumers are, of course, very much price sensitive, so they are constantly looking for some discounts or special offers from the insurance providers. And sometimes they are even prepared to change insurance provider just because of lower price or discount or special bonus they might get. And sometimes even at the expense of poorer coverage. That is sometimes done consciously and another time not consciously. The basic expectation of all consumers is always the same, and the consumers, they hope they will get what they thought they have bought. So this is the basic principles, and this is very important also in the time of crisis, that market conduct is scrutinized, and we put a great importance on this aspect also.
So there is a change of generations in what consumers are concerned, a change that entails also a change of expectations and needs. But I think there is also a change in the risks. There are risks emerging beside the pandemic risk, which is the headline, makes the headlines since many months already. But we are seeing an increasing cyber risks, maybe other credit risks. Hrvoje, have you seen in your market signs of these developments? Are insurers prepared to cover new risks or extend coverage on the older policy to better answer these needs? You don't have the microphone.
Yes, generally speaking, I would say that we have more coverage to provide that our customers do want. Unfortunately, we are standing ready to provide any kind of insurance coverage our businesses or citizens require. We are constantly, as I said, reviewing and our products, and I have to also mention the statement from IOPA regarding product oversight and governance, in which they have requested that the insurance manufacturers assess all the products, how they offer value to the targeting market and something like that. And I think insurance are looking into it, the risk coverage, the exclusions, the key benefits, and we are trying to really target their really needs and what they really require. And it's I would say, permanent task on part of the insurance industry, and it is given by legislation, but it is also given by common sense. Regarding pandemic, yes, we do not have a significant part in business interruption insurance, so we did not have any disappointments regarding pandemic, which was a risk which is usually included. As a general statement, I have to say that the European insurance industry wants to work very closely with the European Commission and IOPA and everyone to find a solution based on insurance, but it cannot only be provided by insurance industry. We have to find some kind of a public-private partnership in how to tackle this threat in the future. And this is something that really think that standard insurance model does not work, of course, but some of the solutions based on insurance models are, of course, possible, but we need to see strong involvement from the European Commission and EIOPA, and I think we are working closely with them with the roundtables that we conduct on the high level in Brussels. Regarding, of course, some of the emerging risks like cyber, yes, they are ever present, of course. Maybe they will increase in the future. However, we have always need to take into the account the current status of certain markets regarding penetration and density. You know, if we compare, for example, Croatian number where we have a property per capita premium of about 48 euros. Compared to EU level, which is around 168, then you see that we have still a lot way to go in some of the traditional, I would say, risks. So now we see some increase in property premiums, or maybe, as I said, earthquake, some of the risks which have happened, that they are trying, the customers are trying to find coverage for that. Of course, some of the very trendy, I would say, risks like cyber, yes, it is about to happen, but of course, I think all the emerging markets really need to first cover all the, I would say, basic range of risks which are actually threatening to the business, economy, and the people.
Okay, then. We are approaching slowly the end of our transmission, but we will talk about the future more in the end of our talk. But before that, it is my duty as a host to dedicate a few seconds to the show sponsor, who is the Euroins Group, a group that is becoming lately a real regional player. And we are thankful to them that have supported the realization of this show. Going from here, let's step into the future, put a small step into the future, or look a little bit to the future. And because calibrating insurance actions and strategies depends at large by the general economic environment, what this is offering or the limitation that is imposing, I would start with Davor, and I would like to find out from you what is, in your opinion, the future in the, well, we cannot speak about a late future, at least for the next months. How will look the economic environment for insurance? What opportunities will they have, or on the contrary, what would be the limitation? Also, do you foresee a moment of return to the normality that we were knowing half a year ago?
Thank you for the question. Yes, so the future economically, we think that the economy will normalize sooner or later, of course. Some sectors and segments of the economy will normalize much sooner. Some like air travel or cruise ships or that kind of entertainment and travel will normalize later. But in the end, it will normalize once there will be a cure for this disease.
Sorry, could you define sooner? 6 months?
Yes, so when we are talking
first half of 2021, or?
I believe that already many segments of economy have improved much from the lockdown, and that, as everybody probably thinks, the new lockdowns will not be here. Some of the segments have normalized. Some of them will normalize in the next 3-6 months because there will be demand, and of course, so some analysis show that let's say tourism and air travel usually normalize in 18 to 24 months since the event happens. So I believe that maybe not 2021, but in 2022, will probably know much better how to live with this virus, and there will be some cures or something like that, and that the thing will normalize. In 2021, I believe that the economy will be much closer to the, let's say, not all segments, but many of them will be much closer to the pre-corona state. What that means for insurance and what we look at is, of course, yes, many businesses have survived thanks to the government help, and many of them will seek for funds in the next few months because they will, due to the solvency or liquidity needs. And as I mentioned before, I believe that insurance companies should investigate and explore alternative asset universe directly or indirectly through joint venture funds, venture capital funds, infrastructure debt. And I believe that's also opportunity for insurance companies. So from one side, we need higher yields. On the other side, there are, let's say, businesses that need cash that we still have and we would like to employ it. So, but of course, that process is not easy. First of all, the insurance company needs to have experience in that. It's much more complex investment process than just buy the bond or equity on the stock exchange. Much more departments needs to do co-work together, legal, compliance, tax, account department, and asset management department. So it's much, and of course the process of investment is much longer. It lasts from 6 until 12 or 18 months to invest in something like that. So I believe that this is the way that the insurance companies should part of their fixed income assets to put them in place for part of the fixed income places, and that also there will be a need for such funds.
Well, it doesn't seem easy. It doesn't look easy, but on the other hand, it doesn't look very bad either.
Yes,
So it's
I agree. I think that the central banks have done a really extremely good job in the last few months, and also together with the fiscal governments, with the governments that helped with wages. So it's a big wind in the back for all of us, and many businesses have survived. And I think that's an easier starting point than if they were closed due to not having the wages for the employees or liquidity to pay rents or something like that. So I think that it's not few months ago, if somebody presented us the scenario of a total lockdown, I think that we would all expect much worse economic conditions now. But I think that the central banks and governments have done quite a good job in the last few months.
What about the possibility of a second wave immediately here?
Yes, absolutely. There is always a possibility of the second wave, but I think that everybody would be much more wage against the economic impact of the lockdown or not. So I think that some measures will be taken, but the general lockdown as it was in March is really hard to imagine at this point.
Hrvoje, you had something to add, please?
Oh no, I just had a question for Davor, since we don't see each other
of
often.
Course.
How about I ask him a question? You know, he has said that the central banks have done an excellent job and bringing more money into the economy, and we have seen this regarding the stock markets, global stock markets, and we have seen in past months during lockdown and now a significant increase in values of our stocks, which have plummeted, which have gone so high that maybe some say that it is unrealistic, that we are looking for that this is not sustainable. So in this regard, do you think that there is a lot of money floating around, which will eventually, with the slowdown of economy and loss of jobs, opportunities, that it will backfire in the future or the beginning of next year or the whole next year?
So first of all,
please.
can I? Many people see higher equity prices, but it's not the market. Some companies are really high. Most of the companies are not. So S&P is about zero, Nasdaq is plus 30%, and French index is minus 10 or 15%. So it's not the same. Some companies are really have high valuations, but the most of the market still doesn't. That's the first point. Second point, yes, it's probably also a part of this abundant liquidity in the system, and that's why I think that the central banks will not decrease the liquidity in the system. If you see that there are some, let's say, analysis that show that ECB will increase this PEP program in December, that the Fed is also either will still put this aggressive monetary policy still in function. So I don't see that the decrease of this liquidity in the future. So I think this is the condition sine non qua for the markets, because of the governments. The governments have quite big budget problems. All governments will have 5, 6, 7, 8% of budget deficit, and these numbers won't disappear. So without this liquidity, we would have a big drop in all economic numbers. So I don't see this disappearing in the next few months.
Happy with the answer, Hrvoje?
Yes. We rehearsed this question and answer before, so it sounded so spontaneous, but it's not. So.
Oh,
thank you very much. We'll get back to you on this one.
Don't reveal all our secrets. And to conclude this meeting, Hrvoje, let's take advantage of this optimistic atmosphere in the end. And I would like to ask you, in your view, which is the main lesson that insurance have to learn from these events of 2020? And are also some opportunities that you see in the future born by these events?
Well, it's always very popular to say that the crisis represents also an opportunity, but I'm not really certain that we could say such a thing, at least for our market. We had a very strong and excellent last year, looking for record highs this year. However, it will not happen. But of course, as I have said before, crisis breeds innovation. We are adapting technological change more rapidly, and I think coming out of the crisis, the insurance sector will probably look fundamentally different. We are expecting it to be more agile, secure, connected, digitally enabled, all these fancy, I would say, terms that are very popular to splash around. And I think, but this is something that will eventually happen. We have seen the changes. Even the government bodies and institutions are adapting this change. Everything is now possible to be handled online, which was a dream before. And I think we will, of course, keep the pace with this transformation. And who stays on top of it will be the winner. And those who fall back behind and only do the old way will probably lose the market appeal. As I said, this uncertainty will probably last in behavioral terms, and I think the customers or the people will turn to taking care of their health, of their family, of their connection, of their communities, as we have seen within the states' economies. All the states have, I would say, appeared to embrace their national priorities first. And I think this is a new landscape. I think that the insurance industry is resilient. It will survive. It will definitely be very supportive to all the European-wide transition to the sustainable society and some new challenges, or how to tackle, for example, climate change. I think we are somewhat of an industry that that people and businesses and the, I would say, EU can rely on, and I think we are ready to help the economic recovery as well. But of course, we need to change. We will definitely change and adapt. However, I have to stress that, for example, in our region, we will feel the consequences, and I don't think we have felt them yet. I think in the next 6 months there will be some of course economic instability, which will of course also trigger our results insurance-wise next year. And this is something that it cannot be neglected, because some of the consequences of this crisis we will feel them after maybe even the crisis pass. But of course, the opportunities are perhaps here, and I think all European, especially also Croatian industry, is ready to embrace this change, and of course to respond accordingly.
Oh, on this optimistic note, I would say carefully optimistic, because still there are many unknown elements. In my view, I would say that maybe the only good thing that this crisis has brought to us is that it pushed progress in some areas, have forced us to change and to adapt and to improve, and hoping for the better. I would like to thank our guests once again for their participation. So thank you, Hrvoje, thank you, Davor. Thank you also to our absent guests in this moment for their input. And for you, the viewers, thank you for paying attention, for watching us. And I would warmly invite you to watch our future edition of Xprimm Time for Business. There will be other markets, very interesting, a lot of contributions, and we are waiting to see you online. Thank you, everybody, and goodbye.
Thank you. Bye-bye.
Thank you.